Right now, as I record this, bombs are falling on Tehran. Iran's supreme leader has been killed in a joint U.S. Israeli strike. Iran is retaliating with missiles across the Middle East, hitting targets in Israel, the UAE, Qatar, Kuwait, and Bahrain. Oil prices are surging, markets are in free fall, and millions of ordinary people who had nothing to do with any of this, just lost access to their money. Banks are freezing, borders are closing, money machines are running dry. And right now, Bitcoin is still working. Welcome to Confidently Crypto, the podcast that keeps you ready for what's now, what's new, and what's next in the digital asset economy. I'm your host, Dr. Tonya M. Evans, law professor, fintech strategist, and your chief learning optimizer, here to help you move from crypto curious to confidently crypto. If you're new here, follow the show and tap that subscribe button so that you never miss an episode. Returning listeners, you already know this is where smart people come to understand what's really happening with their money. Now, let's get into it because today's episode might be the most important one I've ever done. Let's start with the state of crypto. And friends, there's a lot to cover. On February 28th, 2026, just 2 days ago, the United States and Israel launched Operation Epic Fury, a massive military campaign targeting Iran. The strikes hit at least 9 cities, including Tehran. Iran's supreme leader, Ayatollah Ali Khamenei, has been confirmed killed. Iran immediately retaliated, launching missiles at U.S. military installations across the Gulf in the UAE, Qatar, Kuwait, Bahrain, and Jordan, and striking Israel. Shipping through the Strait of Hormuz is slowing. Oil prices jumped nearly 20% in February alone, with Brent crude settling around $72 before the strikes. Insurance rates for tankers in the Gulf could spike 25 to 50%. This once-in-a-lifetime generation geopolitical event is unfolding in real time. Bitcoin is trading around 66,000 after 5 consecutive months of decline from its all-time high of 126,000 last October. It dropped below 66,000 in February before recovering. Spot Bitcoin exchange traded funds saw $6 billion in outflows over the past 4 months, but inflows resumed last week with over $787 million in ETFs coming back in. The markets are volatile, but Bitcoin is still trading. It's still moving. It's still accessible. And that matters more than any price chart right now. As for the SEC, Chair Paul Atkins acknowledged yesterday that the U.S. missed critical opportunities to shape crypto policy and signaled a faster pace of innovation-friendly regulation. The SEC also granted exemptive relief to Wisdom Tree for 24/7 trading and instant settlement of a tokenized money market fund. Progress continues on that front, even as the world shakes. Meanwhile, reports are surfacing about Iran's extensive crypto infrastructure, an estimated $7.8 billion shadow economy that the regime has used for international trade and sanctions evasion. But there's another side of that coin. Ordinary Iranians have also used crypto as a financial lifeline during protests and economic collapse. When the Iranian government cut internet access back in January, when the rial collapsed, when banks froze accounts, crypto gave people an option. And that tension between how regimes use crypto and how everyday people need it is exactly what we're unpacking in this episode. I want you to think about something for a moment. You wake up tomorrow, your bank is closed, not for a holiday, permanently. The ATM gives you an error message, your credit card declines, wire transfers are blocked. Your government has frozen financial systems, maybe because of war, maybe because of sanctions, maybe because of a currency collapse they can't control. This isn't hypothetical. This is happening right now in Iran. What happened in Ukraine when Russia invaded in 2022, it happened in Sudan when civil war broke out in 2023. It happened in Lebanon as banks locked citizens out of their deposits for years. It happened when blackouts hit Spain and Portugal just a while ago, and ATM and credit card networks went completely dark in those countries. Everything you think is safe, your savings account, your retirement fund, the dollars in your wallet, all of it depends on systems that can fail, systems that can be shut down, frozen, sanctioned, or bombed. This is why cryptocurrency was created in the first place. Not for speculation, not for meme coins, not for political stunts. Bitcoin was born in 2009 in the aftermath of a global financial crisis, when banks failed, when governments bailed out Wall Street and left Main Street behind, when trust in centralized financial institutions hit rock bottom. The anonymous creator, Satoshi Nakamoto, embedded a message in the very first Bitcoin block, a headline from the Times in London about banks getting yet another bailout. The message was clear. We need a financial system that doesn't require trust in institutions that keep failing us. Now, let me paint the picture with real examples. In Ukraine, when Russia invaded, the central bank immediately froze financial borders. ATMs ran dry, banks limited withdrawals, but crypto kept working. Ukraine's government itself issued an official call for Bitcoin and Ethereum donations, a first for any sovereign nation. Pro Ukrainian causes raised over $212 million through blockchain. Ukraine's deputy digital minister said that traditional financial systems would have taken days to process transactions, but crypto allowed them to purchase vital supplies almost immediately. Around 60% of their suppliers were able to accept crypto, and today, Ukraine has among highest levels of crypto activity per capita in the world. In Sudan, where civil war has displaced millions, people fleeing violence have converted savings to Bitcoin because carrying cash is too dangerous. Crypto provides a way to transport wealth across borders without a bag of bills that can be stolen or confiscated at checkpoints. And in Venezuela, where hyperinflation made the national currency virtually worthless, people preserved their life savings by converting to Bitcoin, a digital asset with a hard cap of 21 million coins that no government can print into oblivion. In Lebanon, where banks locked citizens out of their deposits, their own money, for years during economic collapse, crypto became one of the few ways to actually move value. And just over a year ago, when blackouts in Spain and Portugal shut down ATMs and credit card networks, cutting people off from their money, Bitcoin kept working. Satellite nodes, mesh networks, and offline wallets allowed transactions even without power or internet. Now let's talk about Mexico, our neighbor to the south and one of the world's largest remittance corridors. Mexico ranks 14th globally in crypto adoption and has an estimated 71 billion in annual crypto transaction volume. But here's a deeper story. More than half of Mexico's population doesn't have a bank account. They're not unbanked because they're irresponsible. They're unbanked because of high fees, minimum balance requirements, and increasingly restrictive banking regulations. Mexico's central bank has kept a cautious distance from crypto, prohibiting banks and fintech firms from offering crypto services since 2021. But the people, they're using it anyway for remittances, for savings, for building financial resilience outside a system that was never designed to include them. And as for the UAE, it recorded over 30 billion equivalent in crypto inflows between mid 2023 and mid 2024, roughly 10% of the entire Middle East and North Africa region's total. Institutional sized transfers grew by 55% year over year. The UAE has built one of the most comprehensive virtual asset regulatory frameworks in the world. With Dubai's Vera, the DFSA and the DIFC, and a new federal central bank law that brings crypto, DeFi, and stablecoins under formal oversight. But right now, today, Iran is launching retaliatory missiles at U.S. installations in the UAE. Air traffic in the region has ground to a halt. Shipping through the Strait of Hormuz is slowing. For all the UAE's financial sophistication, its geographic proximity to this conflict puts its traditional financial infrastructure at risk. And for the millions of expats, migrant workers, and business owners who depend on that infrastructure, access to money, well, it just became a huge question mark. This is the reality. Even the most advanced financial systems in the world are vulnerable to geopolitical shock. Crypto doesn't eliminate that risk, but it provides an alternative rail that doesn't depend on any single government, any single bank, or any single physical location remaining stable. Now, I know what some of you might be thinking, or what your cousin, your coworker, or your favorite cable news host might be saying. Crypto, just for criminals. And let me address this head on because this myth is one of the biggest barriers to financial empowerment, and it's built on half truths and outdated assumptions. Here's what the data actually says. Chainalysis, the leading blockchain analytics firm, the one that governments and law enforcement agencies around the world actually use, released its 2026 crypto crime report. And yes, illicit crypto addresses received an estimated $154 billion in 2025. And that sounds enormous, but context, it really matters. That figure was driven overwhelmingly, a 694% increase by sanctioned entities. And that means governments and state actors evading sanctions, not your neighbor buying Bitcoin on Coinbase. And here's the number that never makes the headlines. Illicit activity still represents less than 1% of all crypto transaction volume. Less than 1%. Now compare that to the traditional financial system. The United Nations estimates that between 800 billion and 2 trillion is laundered through the traditional banking system every single year. Major banks have paid billions in fines for facilitating money laundering. Deutsche Bank, Wachovia, Wells Fargo, the list goes on. And here's another fact that often gets buried. Blockchain is the most transparent financial system ever created. Every transaction is recorded on a public, immutable record or ledger. That's why law enforcement has actually gotten better at tracking and seizing illicit crypto, not worse. In 2025 alone, the DOJ seized approximately 15 billion from massive scam operations. You can't do that with cash in a duffel bag. So when someone tells you crypto is for criminals, ask them this. Does a criminal prefer a system where every transaction is recorded forever on a public ledger? Or do they prefer cash, untraceable, unrecorded, anonymous? And the truth is, criminals have always used the best available financial tools. And for centuries, that tool has been the US dollar. Crypto didn't invent financial crime, but it did invent a system where crime is harder over time to hide. So what does all of this mean for you? sitting in Atlanta or LA or Houston or wherever you are listening right now? Well, it means the world is reminding us in real time why financial sovereignty matters, why understanding digital assets isn't a luxury, it's a necessity. You don't have to be in a war zone for this to be relevant. Think about it. Government shutdowns that delay federal workers' paychecks, banks that freeze your account over suspicious Zelle transfers, or natural disasters that knock out power grids and payment networks, economic sanctions that trickle down to affect ordinary people who had nothing to do with the politics. The question isn't whether disruption will continue, but it's whether you'll have options when it does. And that's what crypto provides, options. Not a guarantee, not a get rich quick scheme, options. A parallel financial rail that works 24/7 across borders without permission from any single institution. And that's not criminal. That's preparedness. That's wisdom. That's financial self defense. All right. So if today's episode lit something in you, if you're ready to stop watching from the sidelines and start understanding this technology for yourself, here's how to take the next step. Step one, grab your free bonus resource. Head to proftanyaevans.com/bonus. That's proftanyaevans.com/bonus. I've put together a special resource to help you go deeper on everything we talked about today, and I'll keep updating it with new tools and guides as this space continues to evolve. That's proftanyaevans.com/bonus. Totally free and my gift to this community. Step two, get the book. If today's episode resonates, especially the myth busting, you need Digital Money Demystified. It's your guide to going from crypto curious to confident. It's available in print and ebook at digitalmoneydemystified.com. And here's what I love. Chapter 3 is literally called Myth. Crypto is only for criminals. And chapter 6 tackles the myth that crypto is anonymous and untraceable. Everything we cover today and more is broken down in clear, jargon-free language you can actually use. The former CEO of the Blockchain Association called it a masterpiece in demystifying complex concepts. And the chief strategy officer at Circle said it cuts through the hype. Get your copy at digitalmoneydemystified.com. And while you're there, check out my other titles, The Cooperative Economics of Crypto, which connects blockchain to community wealth building, and The Legacy of Black Wall Street, and my latest forthcoming, Electing Crypto, which examines how digital assets are reshaping politics and power. Step 3, stay in the know. Subscribe to my free weekly newsletter, the DMD Digest, where I break down the top learn and earn trends, tips, and tools for the crypto curious investor and the future forward professional. You'll find it on Substack or through the link at proftanyaevans.com. And step 4, for the professionals listening, if you're a lawyer, financial advisor, compliance officer, or executive, and you know you need to get fluent in digital assets like yesterday, visit proftanyaevans.com to learn about my FinTech Ready Pro Executive programs and strategic consulting services. Central banks, financial regulators, and institutions across 4 continents trust me when the regulatory stakes are highest. Whether you need a VASP licensing strategy, cross-border compliance guidance, or board-level advisory, that's what I do. Head to proftanyaevans.com and click Contact to start the conversation. Before you go, please take a moment to like, subscribe, and leave a 5-star review on your favorite podcast platform. Share this episode with someone who needs to hear it. someone who still thinks crypto is only for criminals, or someone who doesn't realize how quickly everything they depend on financially could change. Because the conversations we're having here, they're not just about money, they're about freedom. They're about preparedness. They are about power. I'm Dr. Tonya M. Evans. Stay curious, stay informed, stay in community, and stay confidently crypto.